Okay. See, we got Alyssa, Isabel, Emily, and Mark. And is that in the right order? No. So we got Alyssa, Emily, Isabel, and then Mark. Is that right? All right, guys. I'm going to do the best I can to sit in for Nicole. My name is Matt Bird. I'm the CEO of ESG News. This panel is about this is uh, this is secret scale up financing for startups. Correct? Yep. Yes. So I'm going to do the best I can from my vantage point. The one thing about ESG News is that we monitor virtually every deal, both sustainable and traditional, worldwide every single day. Over 2,000 publications. So we have a little bit of insight into funding and the mechanisms that move that. Today's panelists, it's interesting because from each of their vantage points, there's an argument to be said that from a coaching that executive capital is going to be the differentiator from a strategy standpoint. Access to capital is a differentiator. A recruiting standpoint, you always want to recruit the talent, and the Athena, Isabel, right? Yes. And everything's access to capital. What I'd like to do is have everybody introduce yourself and what you do, and we'll move along, and then we'll get into some questions.
Hi, everybody. My name is Alyssa Cohn. I'm an executive coach. I also wrote a book called From Startup to Grown Up, and I have a podcast also called From Startup to Grown Up. So really my life's work is about helping founders in particular, but really all people on the personal growth journey that it takes to grow as leaders. And I would say on this topic, sort of if I think about the scaling of startups, I really focus on the human aspect. And it's not like I'm an expert on how to raise capital, except for this. Most founders at some point in their journey, especially raising capital, experience extreme self-doubt, imposter syndrome, things that get in the way of building their confidence in order to be the human being and the founder and the leader they need to be to raise capital. So I very much help founders sort of get out of their own way at various times, critical times in their startup journey, in their executive development leadership journey, and certainly in their funding journey to help them raise the capital they need to build a business of their dreams and to build massive successful businesses.
Hi, my name is Emily Salveson. I'm the CEO and founder of Streamline Global. We are a large film finance company. I've financed close to 100 films, and I think today, what I'd like to focus on more so than the ins and outs of how to finance a film, because, this is not the room for that, is kind of what you need to be as a founder in order to make your business successful and in order to grow. And all of it takes 10 years to become an overnight sensation. And in those 10 years, there's just a lot that you go through as a founder, which is why my voice sounds like this, because it doesn't stop. And like the secret of scaling up is like you don't get to stop. That's it. Like you don't get to have a day off if your clients need you. So.
Oh, do you need a mic? Well, that sounds exhausting. I have the luxury of sitting on the other side of watching people keep going. I'm a private equity and late-stage venture investor. I'm also the co-founder of Magnify. This is a company I co-founded in 2017, and it was acquired in 2020. Not at a huge scale level, so I didn't get to spend 24/7 on it. But launching it from the ground up was certainly quite a lot of work. So we now invest in companies that are about to exit or about to go public, so about to be acquired by a private equity fund or a strategic acquirer, and companies that will go public through an IPO or a SPAC. We have launched a fundraise for a fund recently after we've taken a number of companies public previously. We had a platform of SPACs and have taken US companies public and European companies public in the US. We target companies that are tech companies for the most part and profitable because these are the companies that are now most likely to exit in the public equity markets.
Hey, everybody. Mark Sadovnik. I'm the managing partner of Fifth Element Group. Quick background, Deloitte. Big on hockey, working with hockey teams. Headed up a global leadership development organization and then got into executive search. Fifth Element Group was launched about 6 years ago at the UN headquarters in New York on International Women's Day because our initial focus was women leadership, women empowerment, women health, etc. And that's grown significantly. We do two major things. We work with all types of clients, but a lot of founders, startups, growth companies, all stages, to help them, number one, amplify whatever impact they want to make. But it's got to be a combination of an economic and social impact. Preaching to the choir here, but that's what it has to be. We trademarked the term leaders who care, and that came from experience of seeing that leaders who really did care about their employees, about the community, about what's going on in the world, did better in business and everything else at the same time. Obviously not everybody, but a significant number of them. And that allows us to represent our clients as leaders who care because we actually have proof that they care, which then more importantly allows us to attract around the world the very best talent who aren't looking for jobs, but they're really interested in opportunities. And that means they want to make great money and they want to have purpose in their life as well. So it comes together really, really well. One topic that's big on their mind right now these days is health, among others. I'm privileged to be a venture partner with Tower Capital, for example, who you've seen around, and others. But working with founders is a joy and everything else that goes along with it. I'll just say one last thing before we get into conversation. We always say for a founder, it's like giving the baby to the babysitter for the first time when they ought to hire the person that can scale it. You don't want to drop the baby, they'll have a concussion or something. But it really does feel like that, and it's emotional. So we're doing a number of precedent searches right now for med tech companies and others. You really have to have somebody that will embrace and thrive, to both your points, in that environment, and their spouse or partner will thrive, that they're in that environment as well. So there's all these little things that come into play, and they've got to have a chemistry like no other. IBM can afford a bad hire, these companies cannot. Yeah. And so that's a quick start to what we're talking about, and it's great to be here.
Fantastic, thank you. Let's start from the left, and we'll move our way down. Alyssa, you were talking about challenges CEOs face when raising capital. Yeah. Why don't you start us off with there?
Sure. I mean, when I meet with founders, and I've worked with pre-seed companies actually, and mostly Series A and B, all the way up to post-IPO, my book is divided into 3 sections: managing you, managing them, the people, your team, and managing the business. Because whenever I deal with a founder, they come to me with a problem, like, oh, we're not making enough sales and therefore we can't tell the right story to venture capitalists, or, oh, this person on my team is not scaling, or whatever. And, that to me is normal, but it always comes back to, well, what conversation have you failed to have with these people on your team? Or what expectations have you failed to set for the business overall? And that's where we kind of look at what's the inner dialogue there happening. I'll tell you a story. One of the founders that I work with, a very well-known company, he was actually fantastic at hiring people and great people, fantastic at grading customers. But he kept not being able to land the deal when he needed to raise a Series C and then later on his D. We really worked on the story he was telling himself in his head. So when he was talking to customers, he really had this vision of where we're going and what we're doing and what it's going to do for you, the customer. When he was selling employees, he really had a sense of why it was so important to leave a large company and get on this rocket ship with him. When he went to VCs, to venture capitalists, he had a story in his head which was, I'm going hat in my hand and begging for money. You can imagine that was not a very powerful story and was not compelling to any investor. And so we had to really help him think about the model he was using for customers and for employees and others, and take that and able to translate that to when he went to investors, that he was able to show up that powerfully. So on the one hand, you say, your self-talk, that doesn't matter. Apparently it does matter, because he couldn't raise enough money to keep the business afloat. Of course, bad things happened, and the ups and downs of startups. But ultimately, he was able to raise multiple rounds of funding, and that's why the company stayed in business. You all know this, and that's why they were able to be successful. So the voices in your head are very significant to being able to raise money, and it starts with that as far as I'm concerned.
So not to use voices in our head as the transitioning point, but Emily, you. Yeah.
All of you right now.
Entrepreneurialism is a personal journey, and you had touched on something when you were doing your opening. So why don't you dive into that personal journey and how do you punch through?
Yeah, I mean, you punch through by keeping on punching. um, so I started my company from my rent-controlled studio apartment that I was paying $1,200 a month for, and I had an idea. I put poster boards up on my closet doors from the 99-cent store, which was what I could afford at the time, and I came up with an idea for a loose idea for a financial model that would help people save money on taxes while also getting investments into films. And so I brought that to, people who are attorneys and CPAs, and eventually grew a client base. But, in the very beginning, it was hairy. It takes a lot. I remember the first client we ever had was this guy who was a doctor in Missouri. He had made a bad investment, and someone had stolen his life savings for the second time. His wife was about to leave him. She was pissed, and we came in and we basically made him whole. And for a long time, that was, people would say, has anyone done this before? And I'd be like, this one guy with in Missouri. And eventually we got CPA firms on board. Eventually we got big law firms on board. But it took years. And, I'll say also, like, in the beginning as a female founder, like, look, I'm successful. I'm not complaining about this now, but, like, in the very beginning, like, it was really hard to be taken seriously. Like, and it took having people on my team who vouched for me to be taken seriously. And eventually, with enough track record, you are taken seriously. But that takes years. It takes time.
No. Keep going.
Okay.
Yeah.
Okay. So, then you start scaling, right? So then you're like, well, I've got so much work, I need an assistant. I can't do my own scheduling. It's taking up 80% of my time. And it's costing the company money because it's time that I could be out, speaking with investors. So you hire an assistant. And then you need a producer to run things on the production side. And so you get that. And then you need somebody who knows how to do financial modeling. You need a CFO, you need a COO, you need all these things. And there's nobody handed me a playbook and said, here's how to make a company, Emily. Like, there are books, of course, and I've read books, but, like, it's kind of like going to grad school, where it's like, yeah, they're going to teach you stuff, but you're not going to get it until you're in it. And you hire good people, you hire bad people. You have to deal with the fallout of the bad people that you've hired. People, not everyone is honest. People do bad things. And eventually, like, as the founder, if you have the integrity and you really care, it's up to you to make things right and keep the company going. And that's what scaling is. Like, scaling is problem solving on bigger and bigger and bigger levels that no one has given you a roadmap for. So Yeah.
Well, speaking of scaling and bigger roadmaps, Isabel, you reach the CEOs at a point of liquidity point, essentially, as you're transitioning through an IPO or a change of control. They're maturing, right? Tell us a bit about where you enter into this journey.
So we tell early stage founders, we know that so an investor will understand that an early stage founder can run a company. Typically, they know the industry, they have a problem they're solving for. And we tell them, we understand you know how to run a company, but do you know how to raise capital? And that will matter for the growth of an early stage company. But when it comes to growth companies, we actually want the opposite. We know the founder can raise capital because they got there, but can they actually run a company? And it flips back to that question. So there's really a moment in the journey of the company, and that can be early or later, but there's a moment in the company when we want the management to be management that can accompany through the next phase of growth, and especially when it comes to a public exit, because it's basically a different job. And that's why we see frequently a change in management, senior management, and the CEO at that pivotal moment in the company's journey. But unfortunately, a lot of companies think about that when they're about to go public. So they're about to file for an IPO, and the board realizes that the CEO who founded the company might not be the right fit as a public company CEO. And it's too late by that time. It takes a couple of years to look for the right CEO, to put them in place, to put them on a path of really understanding the company and being able to market the company to public equity investors. It's a marketing job in large part. It's a communication job. It's communicating with the internal communication and IR communication, communicating with research analysts, and communicating with the street. Very different than figuring out problems. Sometimes it works, and there have been a few examples, but in the vast majority of cases, it doesn't, and there needs to be a professional CEO. And then when it comes to raising capital, whether at an IPO or before an IPO, there's a huge element of luck, just like there is in early stage companies. I've co-founded an early stage company and had come from many years investing in venture capital, had a network, and we were in a tremendous market. We got very lucky. And we raised capital efficiently. We had a roadmap. We knew what we were doing. We were repeat entrepreneurs and followed a path, and were successful in raising capital quickly. But we got lucky to be in such a good market. In contrast, look at the last 4 or 5 years. A lot of large-scale tech companies have not been able to raise capital, and we saw a significant dichotomy in the last 4 years in sectors that are maturing within tech. So that's fintech, for example, insurance tech, health tech. Those are sectors, or even cybersecurity, fragmented sectors with lots of small players, and the next phase of growth is consolidation within the industry. And those companies are not growing through technology anymore. They rely less on tech innovation. So Take FinTech is a good example that a lot of people can easily understand. 10 years ago, 15 years ago, a payment platform was innovative, and it was a new technology, and now it can be built off the shelf. It can be bought off the shelf, and it's easy to replicate and harder to scale. So what we end up investing in is a marketing team and a growth management team rather than a technology. Very different multiple, very different growth model. That's where cost-cutting skills coming into play and communication skills come into play. And those are the ones that have been successful in the last 4 years. So we saw this dichotomy of larger companies becoming even larger by buying the smaller ones, and the smaller ones that were in a race to compete with the larger players lower and lower their valuations and eventually be acquired at sometimes pretty depressed valuations. So there is an element of luck, but how you approach it is, and how you capitalize on a good market versus a bad market, because there are ways to capitalize on a bad market as well, can make a huge difference with regards to success in raising capital.
All right, Mark. I'm looking at you. why don't you bring this topic home on obviously this is leading up to the executive human capital and through the financing.
Can I just say ditto?
Yeah.
Like that. There's so much there. Everything everybody said is right on the mark, and especially most founders, not all, but most founders don't really know how to scale, and they're scaling between 0 and 50, 0 to 100, kind of like you were alluding to, and then 100 to maybe 500, and 500 to a gazillion. There's different people that generally have to do that, and not always does the CEO or the CFO or the CMO like to be replaced, because at that time it's, man, things are really growing now. I want to stay, but they may not be the right person at that time. And the founder, a lot of times, it really does. A lot of times, there's engineers that are founders, and they can't do the marketing or anything like that. So you got to. Well, very often at the beginning, we'll help them bring on an advisory board, even before the board, that can help them raise capital, that can help them be advisory, which is what they're supposed to do. And there can be a board, if you will, that has to be really, really chemistry with the CEO and a really good understanding what their responsibilities are for real, and make sure that we talked about honesty and everything. Make sure that if a board member isn't a saboteur and thinks they could be a better CEO, or that they really are up to advising the CEO while he's super busy on everything else about things that he or she hasn't had the time to think about. I'm trying not to duplicate the right stuff that everybody said. And for example, we're doing 2 president searches for 2 different medtech companies right now. The founders are different people per medtech, so we have to find different people to match it, and then we have to find the other side of it. What impact are they making? What pain are they solving, if you will? But even equally more important, what impact are they actually making that a lot of young executives have been maybe through an exit already. They're not necessarily doing it for the money. They want to make the big hit, not the salary. That's another thing, by the way. The people that are interested in that type of position, those types of things, are not the ones that say, well, what's my salary, is their first question. The first question is, how much equity do I get? And that's the attitude you want them to come in with, obviously, because they're taking a stake. But it's, I guess if I would summarize, well, the impact part is that they want to know that in one medtech company I'm working with, it's home care, self-care. It's going to go global because their technology has been proven. It's really going to hit home. They love that. Some of them love the fact even more that they're going international because they want that too, and they have the experience for that. Another one we're working on detects a lot of diseases in advance to help prevent. And that's a big topic right now too. You're dealing with healthcare systems and everything, and so you may need the industry experience. I have a lot of clients that say, please show me people with a different industry experience. We want different perspectives. And by the way, AKA diversity is more than just gender in this. It's different experiences, different, especially if you're going global, different things like that you have to look at. We even accidentally on purpose call the spouse or partner to make sure they know the person's looking to relocate and take on this position in the first place. Because if you don't have the support of your spouse or partner, to your point about all the time working, it's not going to work either. So there's so many elements that go into play that are and it's really kind of the reason we created that term or trademarked the term leaders who care, because the founders, got to have that persistent passion to keep going, and that's what's going to, if they're being authentic, like you said when they're pitching, Alyssa, if they're being authentic, it's a lot easier for them to get the investment. It's a lot easier for them to attract the employees, etc. And they're more natural. And one thing I've also found is, if an investor says you got 5 minutes, a lot of founders can't do it in 5 minutes, and you really hope you find an investor that really wants to listen to what's going on. And the person that spends so much time getting it to this point, you're going to miss an opportunity as an investor if you don't let the founder really tell you why they're doing this in the first place. And and by the way, it works for employees too.
Can I just jump in on the word authentic? I of course I love that word, and I think we should all be ourselves. And I think there's a tension between being yourself, like, oh, that's just me, I'm not that well spoken, or that's just me, I don't know how to manage people, or whatever, and the need to grow as a founder and as a leader. So you absolutely have to be authentic, because to your point about the 2 CEOs the 2 founders you were mentioning, I'm sure they're different, with different strengths, weaknesses, natural personalities, cultures that they've built.
One's quiet, one's...
Exactly, and you've got to find the right person. However, for all of us, we need to expand our comfort zone to be able to learn new skills. For all of us, when we're learning something new, it's really uncomfortable. It doesn't feel authentic. So we've got to be able to be authentic and be ourselves, but also create the meta skill of learning and growing rapidly, because the journey requires rapid growth as you go. So it's a complicated, I think, alchemy about staying yourself, but also truly pushing yourself to grow new skills so that more things can become authentic to you.
You know, I've got a question, and we started getting into the transition conversation. And as an entrepreneur, as a founder, as an entrepreneur, it's sometimes difficult to think we might not be the right person. How does a board, or how do you prepare a founder to transition out, because the next phase is bringing somebody else in? Please.
It was brutal for me when my company was acquired, and it was intense years of raising capital, building the company, and going through the exits. The exit itself was really time intensive, and it was a very abrupt ending that I wasn't prepared for. And people thought, well, congratulations, you sold your company, you made a lot of money, you're going to, take a break, retire, or whatever. Not retire, but take a break for sure. And the break was not fun. It was stressful. I didn't know what I was going to do next. I didn't know if I did the right thing, selling the company or not. I was kind of lost with no direction. So it was not the level of excitement that you could expect. So, and I would imagine that's hard for a lot of founders, especially who are pushed out of their company. But I think there's tremendous value in recognizing what someone is able or willing to do deep down, to your point, Alyssa, because a lot of founders don't actually want to do the work. They want to get the credit. They want to be a public company CEO, but they don't actually want the communication marketing job that it requires. So that deep dive internally is really what a lot of founders need to do before they try to push themselves into a board or to a group of investors to be the continued leader of the company.
Can I just have one thing?
Yeah, and it seems we've got a bunch of questions on this point too.
Just one last thing. I get a lot of corporate people that say, "I'd love to go work for the startup," and these are smart guys and ladies and whatnot. And they said, "No, I can be hands-on. I can do this," and I keep talking with them and no, they love startups because they're going to grow this thing. We're going to make a lot of money. We're going to do this and that, and then I'll throw in, so when your laptop breaks, what do you do? Well, I go to my IT department. They don't have an IT department at this startup, and my secretary's awesome. You don't have a secretary. And this is real life stuff that they have to think about, and sometimes they don't. And again, the family support is actually so critical because of the time that person has to spend and travel. And it sounds like, well, of course they'll support, but we actually have, when we're getting close to finalizing an individual to be hired for board or whatever, we literally ask them to go home and visualize themselves going to the job. Mm-hmm. Like, okay, you woke up, you're doing this, you do that, you're going to the office, you're staying at home, you're making calls, you're doing this, somebody told you no 10 times that for money, etc. Is that where you really want to be? And it's probably, at the minimum, it's the most they've ever thought about it really happening. Because when you're dating and being courted, it's all really exciting. When you have to make the decision, like, holy cow, I got to do it, that becomes real. So visualizing it can make the difference.
I promise we'll get to the questions. Let me. Do you want to jump in?
I mean, I agree with everything that everybody said. I think with scaling comes a lot of learning and responsibility. I would say the difference between a founder and a CEO founder is that you are ultimately the one who has to solve the problems. And oftentimes they're not your problems. Like, somebody did something, somebody didn't do their job, whatever. It doesn't matter. You're the one who has to figure it out. And that's a very, what my job is like today versus what my job was like when I founded my company. And it was very kind of, I don't know, dreamy and exciting and new and novel, and your first big successes come in, and then you're in Puerto Rico and an A-list director is freaking out and you have to fly home and cancel your family vacation. and eat the cost. Like, that's what being a CEO is. And so, I mean, I would never work for someone else. I don't think I would be able to. But, you know, raising capital, I'm good at raising capital. I'm very good at raising capital. And we've done a lot of impressive films. Like, you know, I've got one shooting right now this second in Kentucky, with Gus Van Sant directing, who did Good Will Hunting and Milk, and My Own Private Idaho, starring Bill Skarsgård and some other big name actors that haven't been announced yet, so I'm not allowed to say them, but they're like A+ list. You know, I've got one shooting in March with Kevin Costner that's like a $35 million like action movie about a Balinese prisoner who breaks out and it steals idols or whatever. Like, you know, I've got some fun stuff going on. We went to the Academy Awards for the Trial of the Chicago 7. We've had successes, but like, people see the successes and people see the Instagram version and people see, you know, the face of it, but they don't see the 5 a.m. wake ups and the 2 a.m. emergencies and the phone calls and the, you know, the lawyers and the accountants all being on a call and bleeding out money to handle PR stuff. Like, it's hard. And so if you're a founder and you want to be a CEO, you've got to understand it's a very different job description. Yeah.
It's a tough journey. There's no question. That's why we're talking about this. All right, if you don't mind, we're going to ask, I think the audience has a few questions, and I think we're going to pick up from a different thing. We'll get you 1 second. Ma'am, you want someone to give her a mic? Or?
She's Canadian. She can speak loud.
That's it. I don't need to respond, so just...
Hi, thanks for all this. My name's Jennifer. I'm a startup founder and CEO, whichever that means from your perspective. But I come from a long line of very successful entrepreneurs. And back then, you know, my grandfathers and fathers and uncles and so forth, they founded their companies and they successfully ran their company. So back then, if you needed financing, you went to the bank and you say, I need a business loan. This is, you know, how I get my customers, and this is what I'm investing in, and this is how I'm using the money. And they survived by making money with clients and customers. And that's how they all did it. That's how my families did it, you know? And so now that I'm the founder, the environment is like very different. There's VCs and investment. It's kind of a different game than starting a company and having customers. And so I'm just wondering, from your perspective, given these two types of different models of starting a business, how do you feel about that? And do you feel that being a founder and then actually not being able to run your company anymore is sustainable? Will this game actually pitter away at some point, and more traditional companies, you know, like families like the Bayer company family, you know, will that still be a thing, or is it just going to be a big race for money?
I mean, I just want to say, like, I identify with your story. My dad is a big entrepreneur. My grandfather created MasterCard. My great-granduncle was the Wizard of Wall Street, Gerald Loeb. Got all of his clients out of the stock market before it crashed and wrote best-selling books about how to invest safely. So, like, that wisdom has been passed down. Unfortunately, the cash has not. Like, I had to build it. Right. Would have loved some of that MasterCard money. Credit, yeah. When I call MasterCard, I'm like, hey, my card isn't working. And they're like, I'm sorry, it'll take 2 business days. And I'm like, I could have owned you. Anyway, but yeah, raising capital. Look, I did my company differently than I think a lot of people did. I built my company deal by deal. I own 100% of my company. And that's the only way that I saw fit, because when I was building it in the very beginning, I thought, you know, I don't trust anybody else to run it the way that I know it needs to be run. And like, even though I don't know how to I don't know how to be the IT department. Like, I know that I'll figure it out. And to me, the opportunity and risk and cost of taking on VCs versus just bootstrapping it, to me, I would rather bootstrap it and suffer through it and like make it work than the easy way, which is what I think, which is, and I get pitched VC stuff all the time too, because I'm kind of in that world, not in a big way, but in the right worlds of VC. And when I hear these kids, you know, they've got their new tech idea, it's an AI, it's AI for dry cleaning, or what, I'm just making that up, but like, can I have $3 million? I'm like, no, you can work. You can work. So that's, I don't know if that helps, but that's my answer.
So it depends on the industry. Tech and the growth of tech specifically has changed that paradigm. There is an expectation now that, at least in tech, when you start, you have to deliver something, a product. And to do that, you need capital. It used to be that entrepreneurs would go get a loan, but to get a loan, you need collateral. And to get collateral, you need revenues or assets. And in tech, you don't have that until you have something to sell. So, of course, tech and the growth of tech across different asset classes and the investments in venture capital, overall in private equity, but more specifically in venture capital, has really changed in terms of its scale and its relevance in our economy. Tech has taken an increased importance in across all sectors, and its significance is now so important that you can no longer go back to that model unless you're not in that industry. And by the way, we like investing in companies that have that model, that are exploding in their needs, and they really need the capital because they're growing so fast that they don't have enough salespeople. The CEO is picking up the phone and calling clients himself, and they really need assistance to grow. Those are the kinds of companies, and the reason we like to invest in companies, because the dollar will have a significant impact, and there's less likely to be a cost-cutting exercise when the company is growing in that way. But there is an imperative to grow through investments in technology, not in the industries that I was just referring to, which are scaling plays, rather in technology, true technology growth, like AI, chip manufacturing, and others. So this is good, but there is also a need as you grow to, as we talked about earlier, to change your job, and there is a need for partnerships. So when you say that you would never work for someone, when you do grow a company to the point that you have investors, you have a board, you always have someone to report to.
Oh, you work for them for sure.
Yeah. So you always have someone that you report to, and the mistake that we often see in founders is a failure to treat a board or investors as partners and rather treat them as the enemy. That's right. And that's why it's important to choose, if you can, who comes on your board in the context of an investment, because you don't want to be in a situation where you feel like the board is telling you what to do, you disagree, it's contentious, and it occupies your brain. It creates a whole other layer of complication and emergencies that you need to attend to. So we want to get rid of that to free up space for founders to be able to engage in a productive way with a board and investors and really truly think of them as partners.
Ditto. Again, so not to be redundant, but 100%, which I kind of mentioned before, of having that relationship with the board, which is something we try to make sure they have that chemistry, because some board members do try to say, well, I can really do better, and they do it in an underlying way. We do have some, and in tech, for sure, it's moving so fast that you can't wait to get more capital. And so many are able to and almost have to compete by going global faster than they ever thought before. Also, based on like this medtech product I was talking about, will go global, and they need capital to be able to do that. We do have some founders, though, that are super happy in the revenues they're making, and they're about to make, and they're making, and they want to keep doing their business. And so, and they're fine with that. They're fine if it doesn't scale globally or whatever, and happy. And then it also depends if they have kids or not that want to get into the business, and what's the succession plan there if they're not going to sell it, or do the kids want to take over, and what do they do? It's all these variables come up, and so I think, and debt is a big play too. You might not want to go for the capital rate, but maybe debt's the right way to go. So, but it is moving so fast, to your point, that sometimes you have no choice because you're building value, and if you fall behind, you're going to lose value.
Thank you.
I think it was a fantastic question. I know we have a gentleman over here that has a question, and see if we can pass the microphone.
Thank you so much. I think that was a great preparation. All your 3 points are basically counting to my question. You said, I want to own my company. You said, I sold my company and I actually was lost what to do next. And you said, founders want to continue the company. I sold my company to a pretty global famous media company. I've 5-fold increased the revenue and profit. I want it back.
Yeah.
Okay?
Yeah.
And I see tons of sessions about how to start a company.
Yeah.
Unfortunately, I exited my company. And do you have any advice how to get it back? And I'm kind of still in good relations with my investors.
So there's a whole asset class around that, and it's special situations. There are investors that will see value in partnering with someone who has in-depth understanding of the industry or of a country or of a company's bankruptcy or any other unusual situation where there can be additional value extracted and built.
And I would just say you are a cautionary tale. So one of the founders that I work with, he had a number. By the way, he bootstrapped, and bootstrapped is becoming sexy again, especially with sort of the hangover of VC and zero interest rates and sort of too much money and too much dilution. And so a number of the founders I work with have really focused on bootstrapping, and they do go slower, and also they're more satisfied, and there's like a lot of benefits from it, right? So he got lots of offers to buy and merge and all these things, and he went out and talked to 5 entrepreneurs he really respected. And it was like, I think 5 who had sold and 5 who were still running their company. And the 5 who were still running their company were in it, and they were excited, and they had all these problems and all the things. The ones who had sold their companies were kind of like on the mountain, investing their money, their private office, and were kind of bored. And 201, they said, I wish I hadn't sold. And so I think so I hear you.
Guilty.
Yeah. And so just to say, you might, I would also say that anyone who I've ever talked to who wants to get their company back, and there have been many, it's like you can't go home again. So I think you might want to just really articulate for yourself, what do I really want? Do I want the purpose, the meaning, the adrenaline? Did I love the business? Right? What are my values? What is really meaningful to me, and what is going to drive purpose in my life now? And figure out what is the sort of calculus or the alchemy of elements from that self-exploration that's going to help you go onto your next thing, a little sadder, a little wiser, but actually there might be something in store for you which is even better.
I would just want to echo that quickly, if that's okay. Like, if you're at some point, your current company will, you'll be ready for your next big thing. And it sounds like, you sold your company, and so now what? Now what am I going to do with my life? Who am I? I assume at least some of your identity was wrapped up in that company, because when you're the founder and the CEO, it matters. It's like a piece of you. And so what I would say is that because you built those skills, you will never lose those skills. Like, those will stick with you forever. And so while the work product may look different, while the industry or sector may look different, you're in the perfect place here to go shop for what's my next big thing. And I think it's really important to listen and to learn. And that's what I've been doing a lot this week is like, as I enter my 40s, like what will my skill sets be best suited for? How do I keep my existing company running smoothly while also building as a person? Because I have my own goals and dreams also, and I'm sure you do too. So use those skill sets, whatever they are, whatever your magic is that led you to be able to be someone who's so fortunate to sell their company and like build the next big thing and build it bigger and better. And the one thing that I want to add to, and what my company has done and what I think is really helpful for an ex-founder, new founder to think about is what is a seemingly unsolvable problem in the world that I can solve with my contacts and my special skill set. And like, how do I bring the right people together to make that happen? But if you look at something that at any problem, the problem that I looked at was that the way that films are financed doesn't make any sense. And so I came up with a way to make them make sense. But if you're able to come up with a problem that everybody else has taken as the status quo, it's just the status quo that, AI is out of control. Like, okay, well, how could you solve that? Or healthcare, whatever sector works. But you will build, and you will build it bigger and better the second time.
Thank you, Emily. HBO came out with a documentary series that dealt with this issue. I think it was called Succession. So you could, season 3 or season 4, I think they addressed this issue specifically. Yeah. That's right. Do you want to pass the microphone off to
Yes, thank you. I need to rush now to another meeting. Thank you so much.
It was a question for you. Have you tried to buy back? What have they said? Because if you say you're 5x, if you say you're so motivated, I see no reason in the world that you couldn't maybe find a pool of investors to do an MBO, LBO, whatever you call it. But to buy back, have you tried?
So I said I will stop growing the company. Otherwise, I'm not motivated anymore. Yeah. And then we had kind of, let's call it bitch fight in a positive way. I got some extra secondaries to keep growing it. And now it's even bigger. I basically skipped or prolonged my put call by another 3 years. And I really feel I'm working for them and I'm not working for my company. Okay. And I disagree a bit on the point that the next big thing is even bigger. I see it more like kids. I have 3 children. I love them all. And I want this company to be successful. And I'm already founding another one. I'm not taking venture capital. I'm really thankful for the first venture capital. But kind of the second is 100% bootstrapped. But I still want my baby back.
Yes,
and that's the point. That
understandable.
hurts.
I think we've got only about 1 more minute left. You had a quick question. Can you make it quick?
Yeah, sure. So you said when you sell your company, you're basically losing a part of who you are, right? Do you believe that it's essential that, let's say, you know who you are before you, let's say, get into building your own company? And how many people have you seen that, like, don't know nothing about their life, do end up going and building something great, which, again, it's amazing. And, like, that's where I see myself hopefully getting to eventually in life. But I'm in this really, like, deep exploration, like, point in my life. I mean, like, I'm 24 at the moment, so it's, like, hopefully, like, that's the next thing. But what's your thought on that? And like,
if you can keep this like 1 minute.
Don't even answer it.
What's my thought on what's the soundbite? What's my thought on
like why people, like, let's say when they sell their company, they don't know who they really are. Like, how do you kind of have a life while building a company, or how do you have a life that you're kind of passionate about and things that you love doing, except of building a company, basically? Is that even a thing?
I mean, honestly, you kind of don't. Like, you kind of don't. It's like having a kid. Like he said, it's like having a kid. And if you, I mean, I don't have kids, so I don't know what having kids is like. So if I've offended anybody, I'm sorry. It's the closest thing that I know to having a kid other than having a cat or a dog. It doesn't stop, and it is wrapped up in your identity. And it is important to take that time and this is advice I'm giving to myself too. It's important to take that time and have a personal life that is part of your identity as well.
Yep. I'm very conflicted with that answer because on one hand, as an investor, we want to invest in founders who have wrapped themselves with the company and are one and think about the company every day when they wake up. At the same time, as a human, I have to say that's a problem. There was for a long period of time an epidemic of people tying their identity with where they worked. It's, I'm a lifer at GE or GM or whatever. This is, my in-laws had their company as Christmas ornaments, and that's a problem because what happens when that's taken away and swept from under your feet? Your whole identity is gone. So I'm conflicted.
Yeah, you can't be totally defined by your company. You can't be. You can live multiple lives, if you will. And even I talk with a lot of athletes, even entertainers. You get defined as well, but we shouldn't be. That's not who we are. It's part of who we are. It's hard, but that's what you got to be. You can be multiple people, different parts of your career.
And just to wrap up, as I've been asked to do, no matter what you want to do, self-awareness and really mining for who you are and assessing your values and assessing what's going to work for you, and that's going to change over time, as you've heard all this too. It's a very valuable activity to do that self-reflection and self-awareness.
Can I say one last thing very, very quick? I want to repeat something. I want to repeat something that my mentor's mentor told my mentor, which is that you need thinking time. You need alone time. That's the biggest thing. Take time to be with yourself. No phone, no friends, no nothing. Go be by yourself in nature and connect with yourself.
Talk to the ocean.
That's good advice. Just a brief note, especially for the women in the room, and a little bit of a side note, but it's the same thing with children. So you mentioned children. It's equally as unhealthy to tie your identity to a company as it is to your children, especially we all know, I'm sure, women who their kids go to college and they're totally depressed because they tied their identity with the kids. So it's actually a good analogy.
Thank you all for coming.
Yes, exactly. Thank you all for coming. I found some insight today, so thank you. Thank you all. Please give them a round of applause.